Greetings. My name is Anthony Gill. I am a professor at the University of Washington and a frequent visiting scholar and contributor to the Daily Economy at the American Institute for Economic Research. I'm also a member of the 1933 Club because I believe that AIER is a great institution to give my charitable contributions to. Now, since I've been out there as a visiting scholar before, when visiting Great Barrington, one of the things I noticed that a lot of restaurants and shops were closed on Monday and Tuesday, or they had some shortened hours. And I was kind of puzzled why this was going on. And I thought, well, maybe they can't attract labor because the wages are too low or what have you. But as I sniffed around more, I heard more and more from businesses that they couldn't attract labor because nobody can afford to live there. We got a housing problem in Great Barrington and Western Massachusetts, and as you probably know, we have a housing problem across the United States. Well, fortunately, AIER has its own excellent path-breaking scholar here by the name of Dr. Jason Sorens. He earned his PhD at Yale University after an undergraduate at the Washington and Lee University. He was the former director of the Center for Ethics in Society at St. Anselm College and has also taught at Yale, Dartmouth, and the University of Buffalo. He's written extensively on zoning, land rights, and even has a book on secessionism published by McGill Queen's University Press up there in Canada. So check that one out. He also co-authors Freedom in the 50 States, so he has his pulse on America and what is going on. The final thing I should note about Jason, too, is that he is the originator of the Free State Project in New Hampshire, based upon some of his writings back in 2001. And he currently lives in New Hampshire, so he walks the walk and talks the talk. And today he's going to be talking to us about housing in the United States and what the problems and some solutions are. Jason, I turn it over to you.
All right, thank you very much, Professor Gill, and thank you for your support of AIER. So before I start my presentation tonight, I'd like to just give a brief introduction to the American Institute for Economic Research and the Harwood Salon program. So AIER is the nation's premier classical liberal research institution and one of the oldest think tanks in the country, founded in 1933. We have three priority focus areas that we work on: sound money and monetary policy, economics and economic freedom, and what we call defending freedom and combating collectivism. And we pursue our work in these three areas with research, the analysis and writing that our scholars do, with educational programs like this one, and with our publications programs. So a little bit about our Harwood Salon program. With these programs, we are bringing together local community members, leaders, and thinkers for engaging conversations that matter on topics ranging from economic policy to political economy to even moral philosophy and political philosophy. And we host events like this both virtually and in cities throughout the country, providing a space to discuss complex economic topics and make them accessible and relevant to everyday life. At the end of this presentation, we'll tell you how to learn more about participating in an event near you. And I must add that our mission is made possible by the generosity of private donors. We certainly don't get any government money, and so we very much appreciate our donors, especially those who are watching right now. With that, I'd like to bring it to our topic for tonight. So my topic is Zoned Out, the Economics of the Housing Crunch. And so I'm going to start my slideshow. There is going to be a little bit of data here, but I hope that it's going to be accessible to you. So to start off, let's think about why people are talking about housing in America right now. Well, first of all, there's a problem with the cost of housing, and that's probably not news to most of you here. So here I've got the median sales price of U.S. single-family homes. This is a chart that shows how that's evolved for both new homes and for existing homes going back to 2007. And you see a steady upward trend after that so-called housing bubble burst. And I would take a little bit of issue with that phrasing, but that's the common idea of what happened in 2007 to 2009. And house prices reached a bottom then, and they've been going up steadily since then. But you'll see that since 2020, really during the pandemic, house prices have gone up quite a lot around the country. And housing cost has been an issue in many regions of the country. It used to be sort of a bi-coastal problem, and now it's becoming much more of a national problem. Here is another measure of housing affordability. This looks at the ratio of home price to median household income. This goes back to 2015. And here home price is the mean or average home price. And you see that that ratio used to be around 5.5 all the way up until 2019. And then since then, it's gone up to over 7. So we've had a big run up in the cost of housing relative to the incomes that people are making. I've tried to calculate the monthly cost of home ownership for the median priced new home in the United States using the Census Bureau data, as well as looking at the average prime mortgage rate per year and a simple standard calculation for what you would pay in homeowners insurance and property taxes nationally. And what we see is that the median priced new home used to be fairly affordable nationally, costing just $1,500 a month in 2019. And that jumped up quite a bit in 2022, 2023, and 2024. In fact, it has nearly doubled. It's risen by about 70% if you compare 2019 to 2024. And you'll see that this is driven both by that rise in the price of homes that we've already seen, plus the increase in mortgage rates, right? So in 2020 and 2021, home prices were rising, but mortgage rates were held down very low. And so the monthly cost of ownership wasn't rising a lot. In fact, that's part of the reason that the price of housing rose quite a bit in those years, is that essentially the Fed was kind of subsidizing home buying by keeping interest rates so low. But by keeping interest rates so low, they generated inflation that then generated very high interest rates. And we're still stuck in a period of high interest rates with really no real end in sight. So the question for tonight is, in light of the latest research, what do we know about how planning and zoning specifically affect the US housing market? So interest rates are definitely a factor in this equation, but a lot of what's happening around the country, especially in the higher demand housing markets, is a problem of supply, and we're not getting adequate supply. And so planning and zoning regulations play a role in that lack of supply. So a little bit of basic economics of housing. So let's start off with this simple observation, which is that local supply and demand drive changes in the cost of housing. And I'd like to illustrate that with a few of the states represented by people on this call tonight. So I've got Arizona, Florida, Massachusetts, Pennsylvania, Texas, and West Virginia here. Some of these are states represented on this call. Massachusetts is the state where AIER is headquartered, and it's also a state that is famously difficult to build in, pretty restrictive in terms of building new housing. So housing supply grows only slowly and at significant cost to the developer. Whereas Texas is the other end of the spectrum. It's the state that is famously the easiest to build in. Most of the state doesn't even have zoning of any kind. And so when we compare certainly Massachusetts and Texas, we see that Texas in the gray there is consistently much cheaper than Massachusetts. And so these values on the left-hand side, these are a rent index relative to the nation as a whole. Okay, so we've seen that housing costs have gone up nationally, and these values simply divide the local cost of housing by the national cost of housing. So any national trend in housing cost isn't going to show up here. So although these lines look pretty flat, basically housing costs have gone up in all of these states. But relative to the nation, they've been pretty steady in states like Massachusetts, West Virginia, and Texas. Relative to the nation, they've gone up in Florida and Arizona recently. So the way to interpret this is, well, in Massachusetts, housing costs about 30% more than it does nationally. Whereas in West Virginia, it costs about half as much as it does nationally. So West Virginia is a very affordable state by that criterion. But in Florida and Arizona, we're starting to see these states become relatively unaffordable, while Texas remains slightly cheaper than the national average. Pennsylvania is even cheaper than Texas, it turns out. But why, why are these states either more expensive or less expensive? So to look at that, we need to also look at population growth and try to answer that question. So here I've got the percentage population growth by year over those same years for these same states. And we see a big divergence here. We see 3 states that are growing rapidly, Arizona, Florida, and Texas. And Texas has been growing rapidly throughout this period. And then more recently, Florida has grown very rapidly. And Arizona has grown, reasonably rapidly as well. At the other end of the spectrum, you've got Massachusetts and Pennsylvania not growing very much, though Massachusetts used to grow a little more. And West Virginia has actually seen its population fall for 11 straight years. Although I believe in 2024, it actually finally saw a population increase again. So what does this tell us? Thinking in combination of housing costs and population growth, well, we see that Massachusetts is slow growing, yet extremely costly. So what could account for that? It's not costly because of high demand, because if it were costly simply because of high demand, it would have higher population growth in all of these states. So that tells us that Massachusetts combines, some housing demand, otherwise it wouldn't be costly, with low housing supply, right? And so that's what's making Massachusetts so costly. If its population growth were higher, then we couldn't necessarily say that it had a supply problem. If we look at how fast a state like Florida is growing, we might say, okay, well, Florida's gone up a lot in cost, but maybe the reason for that is more demand than supply. Its population is growing by over 2% per year. Whereas Texas, this seems like in some ways the sweet spot, at least if you like housing supply and you like low cost of housing, it's growing rapidly and yet is affordable. And so that tells us, yeah, Texas must make it easy to build. It must have a lot of new supply of housing. And at the other end of the spectrum, West Virginia, it's probably so cheap because demand for housing is low there. So we can't say whether or not its supply of housing is abundant or not, whether it regulates housing too much, because it's affordable simply because its population has been falling. So what affects supply? Since we've seen that Massachusetts has stringent, low supply, and Texas has high supply, and the other states might be sort of in between, what's affecting that? Well, so how economists think about supply is actually productivity, how much output you get for the input that you must expend to produce that output. So if you can produce more output for a given amount of input, that's a growth in productivity, that's a growth in supply. That means it's actually less costly per unit that you are building, for example, if we're talking about housing. Okay, so what affects the productivity of the home building sector? Well, we can look at some policy factors here. So cost of materials, yes, that can matter. For instance, the cost of lumber and things like tariffs could affect the cost of lumber and thereby the cost of housing. The cost of labor, so construction labor. So if you have stringent licensing requirements for contractors, that might limit the supply of contractors. If you have stringent immigration restrictions, That may affect the cost of labor because, this is an industry that has typically used a lot of immigrant labor. But the cost of land, economists think about as really important here because, of course, housing uses a lot of land. And in particular, it's the cost of land rights, the cost of being able to use that land to build housing on it. And that's where planning and zoning come in. So if planning and zoning restrictions make it expensive to use land, that's going to feed into housing costs. So let's think about how land use regulation limits housing supply. So there are four things really that land use regulation does to limit housing supply. And you'll find this if you open up a zoning ordinance and you read through it, actually 90% plus of the operational provisions of a zoning ordinance are limiting what you can do with land. Right? It's saying you're not allowed to do this, you're not allowed to do that. You are allowed to do these other things. But if that ordinance weren't there, you'd just be allowed to do what you wanted with that land. So number one is separation of uses. And this is maybe the most traditional function of zoning and maybe the most defensible logic behind zoning is, well, we want to separate, manufacturing facilities and residential neighborhoods, right? So that you can't build a factory in a single family neighborhood, for example. So that separation of uses is one of the key ways that land use regulation limits land uses, but it can also limit housing supply. For instance, if you forbid people from building apartments in a commercial district, that's a way that you limit housing supply. And maybe that's not always justifiable. So, if you have a commercial district where you allow shops and you allow professional offices like dentist offices and things like that, why shouldn't you also allow apartments there? Certainly, that's a way in which land use regulation can limit supply. Limits on densities and housing typologies, and this is a really important one. So, land use regulations can limit your ability to build townhouses or apartments. Just about every zoning ordinance will limit the density of housing units that you're allowed to build. Even in the most densely populated part of the United States, in Manhattan, land use regulation caps how much density you're allowed to build. It says you're not allowed to build more than this number of housing units per acre or per 40,000 square feet or whatever. Number three is mandatory dedications. So the land use regulations might say, well, if you want to build, you have to pay an impact fee. You have to give money to the local government to cover costs of infrastructure. And maybe that's can be justifiable, but it is a cost. Maybe it says if you want to build at this level of density, you need to dedicate 40% of your land to permanent conservation. Or it can say you have to build a certain amount of parking off street for every housing unit that you build. And then finally, land use regulation can set up processes and procedures that add certainly time and often legal expense and expense of getting architects and engineers to draft plans, to even sometimes observe the actual construction. So special permitting, public hearings, environmental reviews, all of those things are kind of procedural restrictions that add to the cost of building housing. And you might wonder, well, what about building codes? So building codes are not technically land use regulations. They're kind of construction standards. And they're generally divided into life safety and energy codes. Now, building codes are of secondary importance, but we are finding, people who work on this are finding ways in which building codes do add to the cost of housing. For one, simply the time that it takes sometimes to get your drawings approved, to get a building permit, to get a certificate of occupancy, get your buildings inspected, that can add to the cost of housing and the cost of building housing. And we've also found that things like size of elevators that are required, or if you're allowed to have just a single stairway in a 4-story apartment building, which is allowed in Europe and allowed in Seattle and New York City, but not allowed in the rest of the US. That is the type of thing that could add to the cost of housing. So a little bit of evidence here that land use regulation does make housing less affordable is right here. I've plotted all US counties for which we have data. On zoning stringency, this is a survey of municipal officials fielded by some University of Pennsylvania economists called the Horton Residential Land Use Regulatory Index. That's on the x-axis here. And on the y-axis, I have the log home value to household income ratio, which is sort of like what I showed you earlier, the price of homes relative to what people are making. And you see a strong positive correlation here that counties with stricter zoning have less affordable housing, higher value to income ratios. And, that doesn't necessarily tell us causality, because it could be that maybe there's some other factor like demand, maybe, places that have high demand also have higher values and happen to have stricter zoning. But it does give us a reason to look into this a little more deeply. And so there's by now a large literature on this. And a lot of it has looked at sudden changes in policies. So upzoning, for example, is basically allowing residential uses where there previously weren't allowed, or allowing more residential density than you previously allowed. And so a number of recent studies look at the effects of upzoning on the supply of housing and the cost of housing. So this is a study of the canton of Zurich, Switzerland, that mandated that municipalities allow more housing. Some municipalities were not required to allow more housing, and some were. So they're able to compare the ones that were required to those that were not. And they found that the more housing they were required to allow, the more housing ended up getting built, the more people wanted to build once they were allowed to build it. And you see this 5 years after, 10 years after, and 15 years after. This is a study of Auckland, New Zealand. So Auckland is a large, actually metropolitan region that undertook a comprehensive upzoning of certain neighborhoods, and some neighborhoods were not upzoned. And so this study also compares the ones that allowed more housing to be built to those that did not allow more housing to be built, and found a very large effect that many thousands of new dwelling units were permitted in those areas that allowed more housing to be built compared to the ones that didn't. And this is a study of another part of New Zealand, Lower Hutt City, which is part of the Wellington, New Zealand metropolitan area. And it finds based on what's called a synthetic control analysis, where it compares Lower Hutt City to a weighted average of all the cities that are very similar to it in New Zealand, and finds that after reform, after more dwelling units were allowed, in particular, they allowed more apartments and townhouses, more of those units were built. So so far looks pretty good for the idea that allowing more supply, deregulation, if you will, increases housing supply. And this is a very new working paper, actually from an MIT graduate student, but it's getting a lot of attention. It's a pretty sophisticated analysis. I can't go into too much detail but it finds, based on a comparison of parcels in New York that were upzoned versus those that were not, that you definitely get a lot more building, and in this case it's redevelopment, because Manhattan doesn't really have most of New York City doesn't have vacant lots, right? So these are lots where they're building up, adding new stories, or tearing down and rebuilding. And you're seeing that a lot more dwelling units are added in those places that allow that, especially where the existing costs were high and you didn't have really tall buildings already. Okay, so what about the effects on rents? Does allowing this new supply make housing more affordable? And it turns out that the effects on rents depend on the scale of the upzoning. So here's that Zurich study, and it finds no effect on rents. So you get a bunch of new supply, but there's really no effect on rents And these are what economists call hedonic rents, so they adjust for the quality of housing. So it's kind of the pure kind of cost of shelter, so to speak. So this is kind of curious, and I'll give my explanation in a moment. Here's the study of Lower Hutt City, which interestingly does find that that upzoning and that new supply does lower rents in Lower Hutt City compared to comparable jurisdictions. Interestingly, though, this study doesn't find that rents in nearby cities that are part of the same metro area declined. Rents did not decline in nearby areas, which is kind of curious, because what might be going on in Zurich is that the municipalities are very small. And in fact, I looked at Google Maps to interpret this, and I found that you can commute to the center of Zurich from any part of the canton of Zurich in under 40 minutes. And so they're really all part of the same housing market. So probably what's going on there is that in Zurich, even though you don't see, I'm going back a slide here, even though you don't see an effect on rents specifically in those places that were upzoned, probably what's going on is that rents are falling throughout the region. So even in the places that are not upzoned, because they're part of the same housing market, those apartments are probably becoming cheaper. And it would have been interesting if they had compared Zurich to other cantons in Switzerland that didn't upzone. But it's curious why that's not why Lower Hutt City nevertheless is seeing a decline in rents compared to other places, even in the same housing market. So part of that might be a demand issue, and we can go into that in Q&A if you like. This is a study of increases in housing supply in Germany. It doesn't look at upzoning. Instead, it looks at how weather patterns affect housing construction. And it finds that where you get new housing construction, you do see rents decline. And this is at the scope of regional planning areas in Germany. So these are large housing markets. And so you are seeing new supply reduce the cost of housing throughout a housing market, especially if you look in that upper left. What's interesting is that rents decline most in the lowest quality apartments. So these are the apartments typically occupied by the poor, right? The lowest income part of the market, who are paying the lowest rents. Those rents decline the most when you build new apartments. Presumably the poor are not living in the new apartments, but that new supply in the market is driving down rents even at the bottom of the market. And that study of Auckland also finds that rents decline in Auckland, that's that black line there, compared to other urban areas in New Zealand. So again, the scale matters. When you add new housing supply throughout a whole housing market, you do see a significant effect on rents, at least over a 5 to 10 year period. Whereas if you add new supply at a very micro level, let's say, imagine one neighborhood adds new housing supply. Well, it's not going to reduce rents just in that neighborhood. It's going to reduce rents throughout that housing market. This is that New York study, and it does some interesting simulations and imagines what would happen if there were no zoning at all in New York and you didn't have any residential density restrictions. And it finds significant reductions in rent, as well as significant increases in the welfare of New Yorkers, particularly for low-income New Yorkers. And in the short run, you see especially strong effects of supply. So this is a bunch of metro areas in the US, and you see a strong negative relationship between new apartment inventory over the last couple of years versus a change in rents. So rents are rising fastest in those places that didn't add new supply, like Champaign-Urbana, San Francisco, Chicago. Whereas in places like Austin, that's very high demand. You're seeing rents decline because they added a bunch of new supply. So local supply and demand drive changes in the cost of housing, and nearby markets affect each other. So when you think about the all-in cost to value of housing, that can't stay different across markets forever because people migrate. So even across cities, eventually, if you build a lot of housing in Austin, for example, it's going to drag down rents in Philadelphia and San Francisco. And so you eventually reach what economists call spatial equilibrium. So really, this strategy of of increasing the supply of housing by upzoning, it really benefits the entire country in the long run. So in the long run, local demand and national supply drive the overall level of housing costs in any particular location. So let's move on now to consider some new state laws that are emerging to try to do what Zurich did, to try to do what Auckland, New Zealand did, and add more housing supply, and basically reduce the regulations on builders so that's in their interests in the free market to add more housing. And there are a number of different ideas here, and this is just a selection of some of the most important ones that came to mind when I was adding this slide. So you have relaxing environmental reviews. You have some states that require state level environmental reviews, and those are um, being revised. We just had California allow for getting around environmental reviews if you're doing infill development where there's already a lot of development. There's really not much environmental concern when you're building in an area that's already built up. Permitting shot clocks and consolidation of where you go to get your permit. A lot of states are working on this, adding time limits to how long agencies can take to approve permits for building housing. You can straightforwardly lift density limits and just say, we're going to preempt some of these local zoning regulations. And most of these state laws have been pretty tentative and they apply only to particular areas where there's a lot of demand for housing or where they think the housing should go, like infill development. But a number of states are now doing this and saying localities, you're not allowed to ban residential conversions, converting a single family home to fourplexes, for example. Vermont did that in areas where you already have water and sewer infrastructure. Florida has the Live Local Act, where it says you can build to the maximum density allowed under local zoning within a mile, so long as your housing is affordable to the average resident, basically the median income. And that's ended up resulting in a lot of new development in Florida. You can allow residential building in commercial districts. Usually these laws don't allow residential and industrial zones, but if you have, say, professional office areas or retail areas, you can build apartments there. Accessory dwelling units have become popular in a number of states now. Say statewide, localities, you're no longer allowed to ban these things. Homeowners are allowed to build accessory dwelling units and rent them out. And so these states differ in terms of how far they've gone in terms of, restricting how localities can try to limit ADUs, but they've all said that you've got to allow ADUs for rental purposes. Limiting or eliminating parking minimums, one of my bugbears, because you don't need to force developers to build parking. They're going to build the parking that their customers want. If you force them to build excess parking, that's environmentally damaging. It adds the cost of housing. It reduces the property tax base. It has all sorts of negative consequences. Subsidizes cars relative to other modes of transportation. So states are now looking at that. Single stair, so allowing you to build 4-story or even up to 6-story apartment buildings with just a single stairwell. Third-party permitting, so allowing builders to use private inspectors instead of relying just on municipal officials. Requiring compensation or consent for downzoning. So if you take away land use rights, do you have to compensate landowners? That's what Arizona requires. And in North Carolina, they actually sneaked into law something that just actually requires the consent of the landowner before you take away land use rights. So a very far-reaching law, and it's expected to be repealed this year and replaced with something else, but very far-reaching limit on what localities can do to limit your land use rights. Now, states are also sometimes doing some harmful stuff. So rent stabilization, so limiting the rate at which rents are allowed to grow, which is basically a form of rent control, a price control. They creates a lot of problems and actually disincentivizes supply. Inclusionary zoning is a softer form of that. Urban growth boundaries, like in Metro Portland, eviction moratoriums, investor bans. I don't think any state has actually passed one, but it's been proposed in a lot of places to ban investors or corporations from owning housing, and it's actually quite harmful to housing affordability. So I'm running out of time here, but and I'd like to get to your questions, but one resource I'd like to highlight here is the National Zoning Atlas. So the National Zoning Atlas is a tool that you can use to look at zoning in your area. And not every state is in there yet, but it's being actively built out, and some states are fully built out. And so that's a fun place to look and see what the zoning is like in your neighborhood, in your city, in your state. And there are some statistics that you can compare across states. So you can look at the percentage of the land area that's available for two-family housing, duplexes, for example, or three-family or four-family housing. You can look at the percentage of land that's available for small lot, single-family housing. So, starter home subdivisions and things like that. You can also look at the percentage of land where parking minimums are required. So there's a lot that's really interesting there. I was the principal investigator on the New Hampshire Zoning Atlas, and I like to think that we have maybe the best state zoning atlas. There's a lot to dig into in the New Hampshire Zoning Atlas, but it's a great tool and something that you can actively get involved in. So if you are a researcher or an advocate in this space, I would encourage you to get involved in the National Zoning Atlas and think about creating a zoning atlas for your state. So with that, why don't we open things up for Q&A and have a discussion here? And I have been very active in these conversations about housing, and I'm perfectly happy to take hard questions here about what are the costs and benefits, what are the trade-offs involved with deregulating housing supply as a strategy for getting the cost of housing down.
Fantastic, Jason. Thank you very much for that presentation. I should note that we had the PowerPoint presentation on to the view that you should have been watching. That was my fault. I didn't click the right button, so we didn't get the full screen. Blame me on my inexperience on that kind of stuff. Anyways, we have a number of great questions that are already lined up in the queue. If you do have some questions, please use the Q&A function down at the bottom. Might not be able to get to everybody, but we'll try to keep a record of this and make sure that we incorporate this in future conversations. I want to start with two individuals. There were a number of questions from two individuals. It was Anthony and Andrew asked the question here. Anthony starts off by asking, why is zoning all of a sudden a problem, considering that zoning laws change rather slowly and have been around for a little bit of time? Andrew adds to this with two other questions. Is this a question about interest rates? Is it an interest rate story and how that relates to mortgage interest rates? And also, has there been an effect of people working from home, out of home offices since, well, the pandemic about 5 years ago?
Yeah, great question. So let me take those in order. So yeah, zoning has been around for decades, but what's interesting is that so-called growth control zoning that explicitly tries to limit residential densities and keep a sharp lid on new housing really dates back to the late 1960s, and it was at first a kind of a bi-coastal problem, and you see this emerging in states like New Jersey and California in the 60s, and then really takes off in the 70s and spreads to New England. And what's happened in the 2010s is that this form of zoning has spread around the country rather gradually, but you're starting to see it in the Sun Belt. And there's a new paper by a couple of top urban economists, Ed Glazer at Harvard and Joe Giorco at the University of Pennsylvania, that looks at whether America's suburban frontier has closed. And what they find is that in a lot of these Sun Belt markets, we've started to see them bump up against the limits of new housing, because a lot of those places allowed for a lot of sprawl. So they allowed you to build single family very easily into the hinterland in a way that you couldn't in the suburbs of, say, Boston, which tend to be very restrictive for even single family housing. But what's happened is that they've kind of built out from the city center so far that they're bumping up against those constraints because people want to live where the jobs are. And so now to allow for more housing supply, they really need to allow for more multifamily housing and more dense forms of housing. And so in those markets that haven't done that yet, we are starting to see housing costs go up quite a bit. Yes, interest rates are part of the story. So the Federal Reserve goosed demand in 2020 and 2021 with very low interest rates. And especially when you think about inflation rising, that drove real interest rates negative. So it was worthwhile to take on a lot of debt. Why not take on a big mortgage? So that definitely played a role in this, but we haven't seen those housing costs come down once interest rates rose. So it's not purely an interest rate story. And by the way, we all already saw, big housing cost problems in a number of markets even before the pandemic. Work from home, yes, another factor unleashed by the pandemic is that it shifted where the housing demand was. And so in a lot of the kind of center city, big city markets, we saw a decline in demand. Much of that was fairly temporary, and we're seeing that demand come back in places like New York City that people were fleeing from in 2020. Now housing costs are really going up rapidly in a lot of those markets again. But you definitely saw that in Idaho, Montana, Florida, Arizona, Maine, New Hampshire, Vermont, these kinds of high amenity markets where households like to be either because they like warm weather and beaches or because they like mountains and skiing. Those are the places that saw a lot of new demand during the pandemic and a lot of sudden spikes in housing costs. And that's helped make this an issue. But, we're seeing this everywhere. I've talked to people in Tennessee. I've gone down there. It's a big issue for people in Tennessee, even though that was traditionally an affordable market. It's typically pretty easy to build in Tennessee. Nevertheless, you once you start to look at these zoning ordinances, a lot of these Sunbelt markets actually don't have loose zoning. They have pretty restrictive zoning, but it's just that they had so much available land that didn't become observable until that available land was built out. And now we're running into that problem.
Great. Our next question, actually two interesting questions related here, comes from Britt. Can you explain in very basic and explicit terms why the poorest renters would potentially benefit from removing density restrictions in New York City and in other cities? So this relates to keeping people where the jobs are. And also more generally, Britt asked, in your expert opinion, what are the best and possibly easiest first reforms that could take place at most state or local levels?
Yeah, great question. So, sometimes so-called supply skeptics mock housing supply deregulation as a kind of trickle-down strategy. Oh, you build more new luxury housing, and somehow that's supposed to help the poor. But it's actually sort of a tractor beam, if you will, drawing the poor into higher quality housing and really decreasing rents for that bottom of the market. So when that new housing is built, it's high quality housing. People prefer to live all else equal in new housing, right? And so it tends to be higher income people who buy that new housing, and it's not cheap. But they're vacating housing that is lower quality. And by a chain of moves, people are moving into that housing that they're vacating. And they're especially vacating that bottom of the market that, maybe it's old, maybe there's lead paint, you know, um, maybe it's kind of shabby looking. And that's the kind of housing that people are especially fleeing from when you open up a lot of new, brand spanking new, nice housing. And so that's the type of housing that especially sees a drop in rents. And then you also have to take into account the fact that housing is a much larger share of the household budget of the poor than of the middle income and of the rich. So even if you just lower rents a little bit for the poor, that has a bigger impact on their welfare than an equivalent reduction of rents for the rich. And now thinking about what are the most effective reforms that states can undertake, I really think it's that density restriction piece, because that is kind of the most blunt way in which localities typically restrict housing development. So if you can require localities, perhaps they have to be a certain population density already or have access to infrastructure like sewer and water, require them to allow starter home subdivisions, the kinds of places that young families want to move to, require them to allow residential conversions of, maybe legacy, big houses from the early 1900s that, are now occupied by empty nesters and are way too big for them. Maybe allow them to divide that up into apartments. Those sorts of reforms, if you do that on a statewide basis, that can significantly raise the housing supply. That increases the sort of zoned capacity of all these areas and makes it possible now to construct new housing. One of the quotes that I'm sort of guided by here, or insights I'm guided by, is from Ed Glazer at an event that I participated in with him. He said, if you want affordable suits, or if you want affordable clothing, you don't require everyone to get a custom suit on Savile Row. If you want affordable housing, you don't require everyone to get a custom built house. You need to allow scale. So you need to allow that density, you need to allow that scale for developers to knock out 100 units at a time, where they can bring all the labor there, they can get the permitting done, and spread out those fixed costs across a large number of units. That's what makes that housing more affordable.
Fantastic. We have another question here as well from Leith. Leith asked, does the finance of government schools play any role in housing costs? That's an interesting angle. Have you thought
Mhm.
about that at all?
Yeah, absolutely. So this is an important issue in those states, well, really in every state, in different ways. So in some states, schools are financed significantly by local property taxes. And so then the question is, well, how does building new housing affect both the property valuation side of the equation, which should be a positive, right? You raise the value of land. It's formerly an empty field, not paying much property tax. Now it's a bunch of houses paying a lot more property tax. That's a benefit of allowing new development. It should reduce the property tax burden of people in the town. But on the other side of that, maybe people moving into that housing are bringing kids into the schools, right? And so that's an expense for the town. And generally, what that research has found is that kind of, I guess I'll call it medium lot size single family houses tend to be a net fiscal negative. So that's when those are the types of houses that families want to move into. Three bedroom houses with a big yard. Those types of houses generally don't quite pay their own way. But small houses and especially apartments are big fiscal positives because they don't attract families with kids, but they raise land values. So in states where local schools are not funded by local property taxes, where they're funded by the state, for example, you can get actually more restrictive development. So in California, for example, there's a plausible case to be made that kind of divorcing property valuations locally from school funding encouraged NIMBYism, encouraged towns to restrict development because they no longer cared about their property tax base.
Here's a question from Maria and another one that's related to it. Maria observes that zoning protects the environment and there's a lack of sewers and water resources, which limits the development in a lot of different areas. She's interested in whether the zoning atlas addresses this issue. And another question that we have that you just mentioned, California, was that the recent fires in Pacific Palisades has really kind of shaken up the political landscape there to have them start to rethink some of their environmental rules and laws? Has that resonated throughout the rest of the country when we're thinking about easing up restrictions on building?
Yeah. So taking that first question first, so yeah, so if you don't have sewer infrastructure, you have to have everybody on septic. And of course, septic systems can fail. You can get basically toxic runoff, and that can pollute, especially your waterways. And so you certainly need to have a minimum amount of land to put a septic system on it. And state environmental services departments typically regulate this. Now, do you need more land than the state requires? That's the question. And a lot of towns have kind of used that as an excuse to enact minimum lot sizes that are much larger than you need to, to locate a well and a septic system on a plot of land. Septic systems are also improving in quality. So new technologies are now allowing them to be built on smaller amounts of land. You have community septic solutions. And by the way, a lot of communities strategically prevent the development of sewer to try to prevent housing development. So this was a big issue on Cape Cod, Massachusetts, where there was some stories about this where a lot of communities said, we don't want development, so we're not going to allow sewer to be built here. Well, so they ended up polluting their beaches, which is their livelihood. And so that became a huge kind of emergency problem. And now they're undertaking a massive, you know, hundreds of millions of dollars expansion of sewer on Cape Cod to deal with these toxic algae blooms that they're getting. So this is, another issue we need to think about. We should probably try to limit what localities can do to limit the expansion of sewer because they often do it for anti-housing reasons, even though it has negative consequences for the environment. Pacific Palisades, yeah, I think, unfortunately, I don't think California has moved quite quickly enough, especially Los Angeles. I don't think it's the city of Los Angeles that has not moved quickly enough to ease permitting for redevelopment in the Pacific Palisades region damaged by fire. But I think the state of California has started to turn things around and look at easing permitting. Now, they were in a bad place to begin with. So California had the most expensive and time-consuming environmental review process of any state. And so basically any significant housing project was potentially subject to environmental review and requirements to mitigate any environmental harms found. And this was actually negative for the environment because if you were not allowing housing to be built near jobs, then you were encouraging building in areas that were fire prone, in the hinterlands. And so, a big part of fire resiliency is actually allowing more dense forms of housing to be built near where the jobs are and where the demand for that housing is. So yeah, I think people are looking at California, and it'll be interesting to see what happens with housing supply and rents now that they are starting to undertake some reforms to their permitting processes.
We have 40 questions open in the queue. We're not going to be able to get to all of these, but we do ask that you stay in contact with us and maybe you can send their questions directly to Jason or have other conversations and invite other folks to just talk about these things. But we were just talking about the issues of how zoning can actually have unintended consequences, like in Cape Cod with the issues of pollution. Here's another one that kind of takes us in another tangent, and that's the issue of homelessness. Rachel asked the question, people like to attribute the rise in homelessness to high housing costs, but it seems like the rise of fentanyl or even ham-fisted homelessness policy could be the causes. What are your thoughts on this question?
Yeah, no, that's a great question, and it's a complex answer. So I do think that the opioid crisis and the mental illness that has accompanied it is a part of what's going on here. Um, and it has hit certain places more than others. Certainly, if you look across metro areas, a simple correlation between housing costs and homelessness rates is quite high. Um, but not all of that is causal because some of it can be that, where housing demand is high, costs are high, and homelessness is high because homeless people prefer to live in those places too. So, places with nice climates, for example, and that's a small part of it. But we have to also understand that homelessness is not just, unsheltered drug addicts on the street, right? Which is maybe our mental image of homelessness, but actually a lot of point in time homelessness consists of people who are sleeping in their cars, who are in shelters, who are crashing on couches, and maybe are not long-term homeless, but are kind of marginally housed. And I think those are the people that are especially affected by the supply of housing. And one of the things that we have done in a lot of our cities is to ban the lowest kind of rung on the ladder of housing, which is single room occupancies or, dormitories basically. So you don't have your own kitchen, you may have to share a bathroom. Um, you know, Converted hotels, for example, could be a solution to a lot of people who are kind of marginally housed. So I do think that land use regulation and housing policy does play a role in homelessness, and I don't think it's an accident that we've seen homelessness rates rise in the last few years, just as housing costs have shot up in a lot of places.
We have one individual here who's had a direct experience with some of this. That's Russell. And he says an inhibition on repair are historical restrictions. So historical preservation laws and regulations can get in the way of things. And he had to repair his broken windows. He had to go before the historical board, which only meets once a month, and beg for their approval. Has there been changes related to historical preservation, and how has this been used over time?
Yeah, states have so far been pretty reluctant to preempt local rules on historic preservation, but I do agree that these rules can be a barrier to rehabilitation and to new housing supply because often these rules require you to go before a special historic commission and there's a public hearing and you have to bring drawings and all that's an expense and it can intimidate a lot of small scale potential developers from doing things like adding an apartment to a house. So that is an issue, and I think we need to think about how zoning regulations can sometimes affect the quality of housing. So when you have zoning regulations that don't allow more density than already exists, and in many cases, you look around the country, you find a lot of communities where the zoned density is below the existing density. You have neighborhoods that maybe are attractive or were once attractive that were built before zoning, and now the zoning doesn't even allow that neighborhood to be rebuilt if it were somehow destroyed. That limits rehabilitation because a developer isn't going to come in and knock down an existing structure unless you can get some profit margin out of it, and that's typically to come from a little bit of added density. So it's good to have a little bit more zone density than the existing density if you want to increase this quality of the housing stock. So yeah, it's a great point.
I want to finish off with one last group of questions. There's about a half dozen questions asking about what can we do in terms of all this. And one question framing this comes from Glenn. How do state and local lawmakers respond to your story? Are you optimistic about broad-based changes? And how can the folks here listening to you have an impact on their local housing issues?
Yeah, so I am optimistic because this is an area where there are kind of people on both sides who are politically active. So it's not a case where, on some economic issues, you have insiders who get the regulations that they want, and they are extracting wealth from consumers, and the consumers don't know about what's going on, and they're never represented, and so it just continues. And there's almost no hope of making reforms there because politicians only hear from the vested interest group. In this case, you definitely have a vested interest group, which is often actually just the local homeowners who don't like density, especially around them. So-called NIMBYism, and they're very powerful at the local level, and that's why we've seen zoning restrictions get more and more restrictive over time. But at the state level, you have other interest groups who are active. You have employers are a big one. So chambers of commerce. You have home builders. You have realtors. So you have vested interest groups actually who are for more deregulation, and so it levels the playing field a little bit. So that's one reason why I'm optimistic. Um, But there is a kind of a little bit of a catch-22 here, because the best way to solve this problem would be locally, going in and having localities voluntarily change the regulations to allow for more housing to be built. But as we've seen, that won't do as much for housing locally as it does for housing throughout the housing market and even nationally in the long run. So you can't really, in good conscience, make the case that, oh, we can really reduce the cost of housing in our town by allowing a lot more housing, if it's a small town and it's part of a greater housing market. You really need these solutions to come at kind of regional or state levels if you're going to see the impact that you want on rents and housing costs. So yeah, I think, talking to your state legislators is a great way to do this, and maybe creating incentives for localities so that they can personally benefit from allowing more development. And the property tax benefit is a great example of that.
We are at time and we still have 40 questions. You keep adding these questions because it is a very hot topic. If you do have additional questions for Jason or for other individuals within this discussion, you can send an email to Harwood Salons at AIER.org. That is Harwood, HARWOOD, Salons, SALONS, at AIER.org. We'll do the best we can to get some answers for you and answer any questions. If you'd like to get copies of the slides or something, if Jason is willing to share those with you, we'd be happy to get those to you. But we are at time. Such a great discussion here. I just want to pass it off to Jason for a few final words, and thank you very much for coming today.
Yes, thank you very much, Tony. And yes, I would be happy to share my slides and to talk more about what you can do to get involved. But I want to thank all of you for attending, and I want to thank you for your support of AIER. We've become more and more active over the last couple of years with more media appearances, expanded student programs. We're building more relationships with federal and state legislators and influencers. And we want to have more events and conversations like this across the country. So please visit AIER.org to donate, to learn how you can attend or host an upcoming Harwood Salon, and to browse our content. Thank you again to our supporters who are watching. I hope tonight's program inspires you to get involved with AIER if you are not already. Good night.